Good evening, everybody, and welcome along to Trader Talk Radio for Sunday. Hi, Julian. How's it going?
Hi, Chloe. How are you?
Yeah, really well, thanks. Apologies for any noise coming up from downstairs. I think they're going out in a minute.
How are things with you?
Yes. Hectic, but getting there. Hoping for some more cheerful weather in the not too distant future because it's been pretty miserable this week.
Oh, I heard it's snowing. It's snowing in the UK again, isn't it?
Yeah, it has been. Yeah, but it's the kind of miserable slushy snow here rather than the fun stuff that you can build a snowman with. So
yeah, I hate that. Yeah, otherwise the world would run out of carrots, right?
Exactly. Do you want to kick things off, or shall I kick things off, or how do you
Yeah, I
want
could
to do?
I don't. So, folks, I don't really come on this talk very often, but I thought I'd just come in and just to give my ideas. So I've just done some lessons with some students, and I just wanted to share a couple of things that I was talking about with them, if that's all right, Chloe, if I may.
No worries.
We're gonna move across some asset classes fairly quickly. So a couple of things I want to just discuss. The first thing is what happened on Friday. For those of you that aren't aware, there was a bank in the US, a regional bank in the US, that got into financial difficulties and I think has failed on Friday. That created some pretty insane volatility in both the front end of the Treasury bond market, the Treasury note market and bill market, and also in the back end as well too of the curve. So there was a significant fall in interest rates. So that means that bond prices rallied. And in fact, the moves in the very front end of the curve, that means anything up to a couple of years, was actually so significant. In fact, I think it's only actually happened, moves at that scale about 3 times in the last 50 years, actually the length of time that contract has been running. I might just want to quickly share my screen just to illustrate something, because I think from a trading lesson point of view, it's always nice just to go back and say, oh, okay, is there anything that we can learn from a move like that to help us with our trading going forward? So just in terms of an educational piece, let's just have a quick look. And I'll just share my screen very quickly here. Hopefully I can share my screen. And just hold on 2 seconds. Thanks, Sam. Hopefully you guys can see this. Chloe, maybe you could just yell out if you can once this becomes clear to everybody.
Yeah, I've got it.
Okay, brilliant. Okay, guys, so this is the what we call the euro dollar futures. So this is the very, very short end of the US interest rate curve. So interest rates go from like 0, which is where the Fed funds that you hear so much about on the news, is all the way out to 30 years, right? So there's a price, if you like, an interest rate for each of those periods of time. So at the moment, the curve has been what we call inverted. So interest rates in the very short end, so think Fed funds and what you pay for mortgages and stuff, is very high. And then as you go further and further out, those interest rates fall away and the curve's inverted, what we call inverted. So a very good predictor, allegedly predictor of recession. So what happened on Friday was everybody panicked. Now, what do I mean by that? Is people took their money out of the bank, because this is what happens when people lose confidence in the bank. I get my cash out as quick as I can, and I've got to go put it somewhere. So where do I put it? Well, I put it into gold, right? That would be a good thing for those of you following the gold market. That asset class moved up very quickly on Friday. And they also put it into the US Treasury market. Why? Because the safest place in the world is in terms of interest rates, in terms of where you put your money, is the US government. So why not go and buy a US government bond, right? Then you know you're going to get your money back. And that's what this is all about return. This isn't about anything to do with interest rates now. This is about getting your money back. So of course you go in there. So we had a couple of moves. This is a daily chart of those Eurodollar futures. And look what happened on Thursday and Friday. I'm just going to highlight these 2 days. On the right-hand side is the interest rate, which is inverted from 100. So where it says 95 down here, that means 5%. Where it says 96, that means 4%. So what happened is interest rates fell, the market rallied in Eurodollar futures, interest rates fell, okay, and over the course of 2 days. And you say, hang on a second, didn't the bank failure happen on Friday? This day here, do you remember we had the big unemployment number and it was all very exciting with a reasonably big unemployment number, a little bit above expectations. The market was thinking, it was worried about a big unemployment number because it would confirm that interest rates were going to stay higher for longer. But what happened on Thursday was we already had the inklings of something really odd happening. So in front of an unemployment number, when everybody's really nervous about taking positions, the market made a really strong statement and took out 8 days of trading. So that's why price action, watching price action is very important. If you were a trader and you had a short position here in these futures markets, right, you'd look at this, you go, oh, something's happened here. I've either been taken out because my stop loss would have been taken out if I was short, or else I'd be on full alert for something going wrong. So there was already on Thursday the inkling that there's something was happening regardless of what was going on in the macroeconomic environment. And then on Friday, bang, we had this big move when the bank news, the failure news came out, right? So already the market had an idea that something was going wrong. So when you look at gold, did we have that exact same thing happening in the gold market? And the answer is, oh, look, yes, we did. So gold, as we know, has been a little bit all over the place recently, but quite frankly, as interest rates, as the Fed is readjusting its interest rate expectations for everybody, i.e. longer for higher for longer, right? Gold has suffered a little bit over the last month or so. And then here we go. Look at this, the last couple of days, bang, and then bang with gold. Up it goes, right? A lot happened on Friday, but did it move before? Did the market have an idea of what was happening? Yes, it did. This is not a conspiracy. This is just saying that some people in the marketplace were concerned enough to change their positions. So sometimes news takes time to get out. We now know with some hindsight that there were already problems. S&P had highlighted, their ratings agency had highlighted the problems of that bank over 10 days ago. So there were already something going on, but look, we're traders, we're global macro traders. We're not following bank stocks or specific banks. We don't know what's happening. So we don't have that insight, okay? But other people in the market do. So what you have to do is to respond to what you're seeing. So then the question is, because we're thinking trading, is what's going to happen on Monday? Now, this is where the world gets interesting. You could say, is this a storm in a teacup, albeit a large teacup? Or is it something new and something systemic happening? Well, the answer will unfold on Monday. So it's very important that Monday opening in the Far East to understand what the market is thinking about what's going to happen next, and then whether you need to take action a different way to reverse what's been going on, or to maybe go with the trend a little bit as well too. So I can't talk about what could happen, but let's talk about where it's been and what signals there have been, right? So I just thought it was quite useful to just bring this up and just highlight to you what's been taking place this week, in spite of the good economic unemployment numbers, the good economic employment numbers that we're seeing. The US economy isn't in such bad shape, hence the higher for longer discussion that's been going on around interest rates. And then this happens. The question is, does it then reset everybody's expectations again? And that's the key thing. This is why trading is so much fun, and we live in this world of constantly moving goalposts about what's actually trying to go on. What we need to do as traders is focus on the price action. That will always give us some clue about what's happening next, and the clues were there in the market if you looked for it. And obviously, for those of you that trade the stock market, we saw a general movement down on Thursday, which was then followed by supporting a gain on Friday, right? So you could see that the market already again had an inkling that something wasn't quite right. And just to give you an example, without getting too specific, if we just go and look at Bank America, right, as one bank stock, was there something happening? So Bank America is quite a big stock. Was there a problem in the market a few days beforehand? Yeah. Did it finally take until Friday to come out? Yes, it did. So in other words, people thought there was an issue because this is one of the biggest banks in America. The price is going down. Look at this move, right? This is a 10% move. They thought something was happening, but they thought something was happening over 2 weeks ago, right? There was a little bit of nervousness. So again, if you follow sectors, if you're delving into this, you could have got some clues. Did you know there was going to be a bank failure? Probably not, right? So this is why sometimes what we have to do is look at that price action, reinforces the price action, and we just try and do what we can to interpret what we can see, right? And that's the key thing. So again, nothing happened in oil. Look at what happened in gold, right? You see this big move up over a couple of days, and that's pretty substantial move up, okay, against the last few days where, again, people are probably short, wrong side of the boat, and now they've had to cover quickly. Chloe, that's it from me.
I can never find the unmute button when the video's on.
That's all. I was going to keep talking for a minute.
I've got it. Thanks, Julian. That's really interesting stuff, and it's interesting, isn't it, that there are fundamental traders and there are technical traders, and kind of marrying the two up can be not the easiest thing to do, but it is still possible to do one or the other. But we just have to take into account what's going on and try and work out how we make the most of those moves with the knowledge that we do actually have. And usually it does take just kind of seeing what's happening in the market to get a little inkling, as you say, of what the next move might be.
That's absolutely right. And look, I think with all of these things, right, everybody's in a different part of their development as a trader. And, I have the advantage of a few years experience, so I can look back on it and I can go, okay, well, I've seen this, this rodeo a couple of times before. But not everybody's been through that, right? So what you need to do is to focus on the price action, say something new is going on. If I have the opposite position on and I'm wrong, then I'll tighten my stops up and get taken out, which is absolutely fine. That's what stop losses are there to do, right? So it protects your risk one way or another. And again, if you've been making money, then it takes you out and means that you're not suffering the complete reversal. It's actually a really good lesson in risk management, is actually what happened on Thursday and Friday, as to how to manage your positions and think about things the way they were. For those of you that are trading mostly foreign exchange, you probably didn't see a lot of change, right? Apart from the Swiss franc, there wasn't a lot going on in the foreign exchange market, because often when this type of financial calamity starts to unfold, what happens is the foreign exchange market goes up. Okay, we'll just wait and see what happens now, and then we'll react next week. So once the money starts to flow again, right? So this was a specific asset market movement. But again, look, really important, really educational, amazing. It's lovely, I wouldn't say lovely, but it's interesting to see this type of price action in the markets that we're seeing at the moment.
It definitely is. And yeah, as you say, Julian, it's something that we can look forward to next week, perhaps, is how the Forex markets are going to react and what opportunities might arise. So I am going to go ahead and take the screen here and just do a little bit of this. I'm going to start off actually with, well, I was planning to start off with the commodities and specifically gold, because that is one of the ones that has moved the most because of that news out. And really, I suppose for me, it's not so much trading the news, but it's more just looking for what is going to start off a trend, because gold, up until a couple of days ago, was not really trending, because we had lower highs. This is the daily chart here. We could just have a quick look at the monthly to see where we are in the bigger picture. These are the levels, for those of you who haven't traded with me before or recently, these are the levels that I pretty much always have on my charts. So the previous all-time high from back in 2011, that is a major horizontal level for me, which I've projected right up to the present day. And then there are a couple of other key levels. This one down here was strong resistance from back in 2011, 2012. That one's projected through as potentially a level of support now. There are a couple down here which aren't so relevant at the moment, but we keep them on the charts because these are such major levels, and gold can move quite significantly. So, if a downtrend were to start from here, it wouldn't be that long before these levels do come into play again. And then this level in the middle here is more of a kind of intermediate weekly level of what has been resistance just over here. So those are the major levels that I have on my charts, and that's really the roadmap that I use to trade gold between. But of course, I do also need to see trend, and that's what has been missing here on the daily time frame. So we did have lower highs, but we just recently had a higher low. Now that was the first inkling that the downtrend was perhaps not going to continue, because we had this slightly higher high here, followed by a higher low, happened to be sitting around about the 200 moving average on the daily time frame as well, which can tend to be a strong level of support when price comes into contact with that. And so now this higher low was formed. There was the potential to actually just have some ranging price action, but what's happened now is that price has moved so significantly upwards. It has come and it has broken above this previous high. So now on gold, there is a higher low and a higher high. That is my definition of an uptrend. In the very basic sense, that having a higher low and a higher high is my definition of an uptrend, and that means that I am looking for long opportunities on gold. Not only that, but this next level of resistance is a significant distance away. So there is plenty of space to trade long on gold, not only on the daily time frame, if there were to be an opportunity there, but also on the intraday time frame. So we can go down to perhaps the 4-hourly time frame. So we can see this trend starting with higher lows and higher highs. We could go down to something like a 30 or 15-minute time frame and see higher lows and higher highs. So on all these lower time frames as well, the uptrends are starting, having started from back around here. And all that remains really is to find entries according to whichever strategy you happen to be trading. So for myself, that would be on the daily time frame. Apart from that, these moves over the last couple of days on gold are a little bit too strong to now start thinking about getting in right now. I would need to wait for a few days and perhaps a bit of a pullback before getting in on the daily time frame. But on the lower time frames, there might be shorter term trades that still could be available, depending on perhaps a pullback or whatever it is that you're looking for on the strategy that you're trading. So definitely bullish at the moment on gold, where it has been over the last few weeks a little bit of a no man's land, but we're just starting to see trend come in there to the upside. Silver is not so clear cut for me. Silver tends to follow on quite nicely, or follow along quite nicely with gold. However, the downtrend on silver is more pronounced. And so, yes, price has moved up. We can see this is again the daily chart. And yes, there was a move up on Friday, but it hasn't broken any previous highs. And in fact, really, this just shows a continuation of a downtrend, and this is just a pullback in that. So silver, I'm actually still bearish. It's not common for me to have a different outlook on silver than I do on gold. But at the moment, I am bullish on gold and still remaining bearish on silver. Excuse me, I've still got this ridiculous cough that I haven't been able to shift for weeks. So the other very popular trade commodities are the oils. So this is WTI here, and we've got Brent crude as well. As Julian mentioned, they haven't really moved an awful lot. The big move in the market on Friday just didn't really affect the oils. That's WTI, that's Brent. Nothing really happening there. And partly that is just prolonging the consolidation. Now, something I very, very often say is, when I see a chart that's consolidating, or a chart that's ranging, or a chart that's just not really doing anything, there is always something going on. Behind each and every one of these candles, there is something going on, even though for the last few months, really, this has not been tradable for me. But there's always something going on, and it's our job to be aware that there's something going on and work out, okay, something's going on. What do I need to see change, or what do I need to see happen in order for me to be able to trade this again? And for me, this is a consolidation. It's a sideways market. What do I need to see happen? Well, I need to see a break of this previous high. That would give me a higher low and then a higher high, which would potentially be the beginnings of an uptrend. I'd like to see a break of this level here, because this appears to be a level of resistance. We see resistance just here. We see it as a level of support over here as well. So I'd like to see that level broken, and then I would be looking for long opportunities. On the other hand, if price were to move down from here, I would need to see a break of this previous low. That would give me a lower low. Then I would need to see a pullback for a lower high, and then I would be interested in looking for short opportunities. So it's no good just looking at this chart and saying, well, nothing's really happening here, let's move on. I have to have a plan because I like trading oil and I want to know when I'm going to be able to trade this again. So I've got to have a plan in place. Same for Brent. I either need to see a break of this previous high, in which case I would have a higher high and higher low, or I would need to see a break of this previous low, followed probably by a pullback to give me a lower high. So those two, it's fairly unlikely that I would be trading those this week, but who knows? We have to keep an eye on price, keep an eye on these levels. You could even set alerts at these levels because these are things that you don't want to miss. Once these breakouts happen, the moves can be quite pronounced and quite quick. And if you miss them, then you miss them. So it might be an idea to set an alert at whichever level you're looking for so that you know to check back again once price reaches that level. Excuse me. So the next thing that I wanted to look at before I get onto the Forex markets are the index markets. So the US stock indices, I would say I'm fairly bearish on them at the moment. So this is the NASDAQ. And if we look at the monthly time frame, there is a strongly bearish candle from February, and we've taken out the low of that candle. So while I was becoming more bullish over here on the monthly time frame, this is definitely a bearish sign. Having said that, it doesn't necessarily mean price is just going to go short from here. It just means that at the moment in the short term, I'm more bearish. I see the potential for price to go down, but having a look here on the weekly time frame, there is actually a higher low and higher high. If we look at the daily time frame, that's where price appears to be turning around. So I was bullish over here, but now price has come back down and actually just about given a lower low here. There's certainly a lower high. So this is no longer looking as bullish as it once was. And certainly the beginning of this month has shown us bearish price action. I'm looking for that potentially to continue. So I'm bearish on the NASDAQ. I'm bearish on the US 30. So that we look at the monthly chart, looks bearish. We've got a couple of bearish months there. Weekly time frame, we've got a lower high and a lower low. And on the daily time frame, there is a definite downtrend there. Lower high, lower low. Price is moving downwards. Not only that, but price has actually just recently taken out this. This was the level of support holding everything up, and that has been taken out over the last couple of days. So that's significant. And I'm now looking for price to move down towards the next horizontal level. Now, this on the daily time frame, again, not really tradable for me because the move started up here and I would never get into a move on the daily time frame, 4 days after it started. Having said that, on a lower time frame, for example, the 4 hourly, perhaps we just need to wait for a pullback in order to get an opportunity into the market. Perhaps we could go down even to something like a 30 or 15 minute time frame, and as long as trend and cyclicity is still happening, then there could be opportunities there. I would say for me, I'm really looking out at the 4 hourly and the hourly time frames at the moment for short opportunities here. Moving on to the US 500, that is also bearish. This is the weekly time frame again, and we can see where we did previously have higher lows and higher highs. Just last week, we've now taken out what could potentially have been the higher low there. That has been taken out. So on the daily time frame, we see a lower high and lower low. So I'm no longer bullish there. I don't think the direction here is clear enough or strong enough, I should say. I don't think the momentum here is strong enough for me to pick out any particular trades, but I would certainly be more bearish than bullish at the moment. The UK 100. Now, this is interesting to me, not only because it's my kind of home stock index, but it's interesting to me because we recently took out all-time highs that we had struggled, if we just look at the monthly time frame there. So price has had an attempt up there in 2017, 2018, and prices really struggled to get back up to those levels. And even when it's reached almost up to there, it's reacted and come back down. So it's only in the last couple of months that price has managed to push up and actually push to new all-time highs here. However, monthly time frame, so February's candle here, that's a rejection candle. It's a rejection of this level. That's the all-time high. It's around 7905 or thereabouts. And February's candle rejected. It did go up there, but it rejected and it closed back down. And since then, price has taken out the low of that candle. And not only that, but come back down to beneath this horizontal level of resistance here. So things aren't looking so good after all for the FTSE. Having said that, we can see here on the weekly time frame that actually these previous highs over here are just about still forming a level. So this is more of a band rather than a thin level of resistance. And price is still just about still above there. So there's the potential that this could be a pullback and there could be more bullish price action to come here. Having said that, the strength of this weekly move is not something that I would particularly relish the thought of trading long into. The strength of this weekly move is so powerful, the momentum behind this bearish move is so powerful that I would anticipate this week probably price coming even further down. So I'm definitely not really looking for a bounce in this area at the moment, even though it could happen, but I anticipate potentially price moving down from there. On the daily time frame, we can see that this level here has just been taken out. And so my thoughts are that potentially, yes, price could move up from here, but it would be for the formation of a lower high, most probably followed by another move to the downside. So those are the index markets I wanted to look at. And then let's move on to the Forex. So we'll start with euro dollar. Now, excuse me, some of these Forex markets are not actually that interesting at the moment. So I will try not to cover boring things too much. But I think it's always good, and I always do start by looking at the major currency pairs. So euro dollar, pound dollar, dollar yen, dollar CAD, Aussie dollar, etc. Everything crossed with the US dollar. Those are my first ports of call when it comes to market analysis of Forex, and then I go into the other cross pairs after that. So euro dollar on the monthly time frame, this is where we can see those monthly levels of support and resistance that I like to trade in between. And we can see a level of support just down here where there is the potential for price to bounce and move back up to this next level of potential resistance. So on the monthly time frame at the moment, the possibility that price could bounce in this area kind of negates the bearishness of that February candle, which is very bearish. But it will just be a case of waiting to see if this level holds or if this level breaks. On the weekly time frame, there is still an uptrend. So I am relatively bullish on the weekly time frame. And on the daily time frame, really this is a sideways market at the moment. I've got pretty much the same low, pretty much the same highs over here. This is ranging price action. We can see this range comes into play over here as well. And so really I need price to break above these previous highs, which means really realistically breaking above that monthly pivot or beneath these previous lows. So while price is in between that area, I'm just not interested at all in trading on euro dollar. It's just moving sideways for me. Cable, I was getting a little bit excited about cable previously. Again, I've got these horizontal levels marked in and price is just caught above this horizontal level of support over here. And that's the monthly time frame. Monthly time frame doesn't actually give me much in terms of direction because of those levels. Weekly time frame also, I've got the same high up here and pretty much the same low over here. So this, as well as the euro, very similar in that really that's just moving sideways at the moment. And then on the daily time frame, this sideways movement, it was a series of lower highs, but pretty much the same lows. This was a consolidation. And of course, when I saw this breakout here, that was pretty exciting for me, especially because it actually just about came below this previous low here, which is the real turning point for me. If price were to break down below their retest, then that would be something that I would want to be getting short into. However, then price turned around and came back up, and it's now right back up within this area here, which is the very rangy price action. So it was a false alarm. Price did break out of there, and I was waiting for a retest and an opportunity to get in short. But now price is right back within that range, so it's no longer of much use to me as things stand. I'm not going to start trading this long just because we've had a couple of bullish days of price action, because there is no uptrend here to speak of. So it's just going to be sitting on my hands and waiting for that. Dollar yen. Now, dollar yen is something that I have been trading now that it had. So we had this really, really strong uptrend, followed by a couple of months of very bearish price action, followed by February, which was a very, very strong month, and that turned the trend around. So up here we can see this strong move up on the weekly time frame. It turned the trend around on the daily time frame. So here we've got this from this really pronounced downtrend, we've then got a clean higher low, higher high, followed by a pullback, and then away we go. Now we're experiencing another pullback. So again, just because I've got 2 days of bearish price action here doesn't mean I'm going to press sell. This for me at the moment is a pullback in an uptrend, and I'm going to see it as such. So I will be looking out for the potential for price to return to the uptrend here on this daily time frame on dollar yen. Now, not all the yen crosses are the same actually, and it's quite unusual actually for me to have such a different viewpoint on the dollar yen as some of the other yen crosses. So for example, CAD yen on the daily time frame, that's looking particularly bearish. We've got Aussie yen looking very, very bearish indeed. So not all the yen crosses are the same. But what I would say, so for example, here on Aussie yen, if we look at that monthly time frame, there is still a higher low in place here. And until that's taken out, until that low there is taken out, then I'm not really keen to take any long-term short positions, because that still could act as a level of support there. So yes, there is certainly bearish price action, but I'm not necessarily acting on that right now. Dollar CAD. Dollar CAD is bearish on, bullish. I'm bullish on dollar CAD. It's not that often that I take a strong position on dollar CAD, but at the moment we had February ending as a very strong month here after seeing higher highs and higher lows. And we have now seen March take out that high, not only take out that high, but take out this area of resistance over here. So I'm bullish on dollar CAD. On the weekly time frame, we can see here higher low, higher high. On the daily time frame, price is just moving up. All I need to do is wait for a pullback really here, and then I'd be looking for a long opportunity. I'd probably be waiting for a pullback into somewhere around this area, because that's the last major area of resistance that price struggled at. So a pullback down to there would potentially give a long opportunity on dollar CAD. Dollar Swiss, really still just a sideways market on dollar Swiss. I'm not taking any strong direction. I'm more bearish than bullish, but there's so much support down here that being able to actually act on that bias looks like it would be quite difficult. So I'm not going to be doing much with that. Kiwi dollar is in a downtrend at the moment. If we look at the monthly time frame, there's a clear and strong bearish candle formed. In fact, it's a bearish engulfing candle formed at this horizontal level here. So price pulled back to that level. It's since moved off downwards from there. We've taken out the low of February. Weekly time frame is showing bearish price action because we've got a lower low at this point here. Could see a pullback to form a proper lower high, but until that, we actually do have lower highs and lower lows on the daily time frame anyway. So this is bearish for me. I'm looking out for short opportunities on Kiwi dollar. Aussie dollar, very, very similar. So the monthly time frame showing a bearish candle for February, and we've taken out the low of the last few months trading now for March. And the weekly time frame has taken out this previous low over here, and the daily time frame is showing lower highs and lower lows. Not only that, but the last 3 days of trading on this time frame have been high test candles. So this has been an attempt at a pullback, which has really not managed to get very far, and price has basically been just moving sideways pretty much for those last 3 days of trading. So that's a potential bearish sign there, that there could be a move to the downside for next week. So I'm looking out for that, and I'm looking out for it as well on lower time frames. So if we get a break of this horizontal level of support here, then a retest on either the 4-hourly or the hourly or any of the lower time frames, I'd be happy to trade that to the downside. A couple of other crosses. Let me just okay, questions. What are the moving averages that I'm using? The red, green, and blue lines. That's a really good question, actually. And the answer is it's not 100% really necessary to. So I think in most of my analysis, you haven't actually heard me mention that. Yes, they're on the charts, but I haven't actually mentioned those moving averages very much. Really, I'm just looking at price action for today. So you don't actually need to know what these moving averages are in order to follow along with my analysis. I'm just looking at price action, but I can tell you anyway, they are the 200, the 50 and the 20 moving averages, but that's not, it's not necessary information. And in fact, you'll notice that some of the charts I have here, I simply don't have anything in terms of moving averages on the charts. So Aussie Swiss is one of the currency pairs that I am looking at to the downside. This is the monthly time frame, so we can see how bearish this is. It's been trending downwards on the monthly time frame for quite some time. So I've got lower highs and lower lows. Weekly time frame, we can see how strong that move last week was. It's taken out all of these previous weeks of trading, including these lows here. Daily time frame, lower highs and lower lows in place. All I'm looking for really now is a pullback, and a pullback likely to be looking around about this area here. I'd like to see a pullback to around about that level, and if that were to happen, then I'd be looking out for a yes, 250 and 20. I'd be looking for a pullback and then a short opportunity around there, but this currency pair is actually moving currently, and the Friday's trading ended, the bar closed right at the bottom of the candle, so there's nothing necessarily to suggest that a pullback will happen right away, and therefore I'm going to be looking for continuation trades on the lower time frames as well on that one. Aussie Kiwi is another one that I'm very bearish on. Got lower highs, lower lows on this daily time frame. Price has just come and broken beneath this level here, which was the level of support, just attempting to hold price up at this point here, but price has broken beneath that. And so again, I will be looking for short opportunities on the lower time frames at the, coming into next week. And if we just have a look at where we are in the bigger picture, Aussie Kiwi tends to be a pretty rangy currency pair for the most part. Obviously, we do see periods of trend like this, but overall, look from the last kind of from 2013 all the way up to the present day, really, prices ranged in this area. So I'm not necessarily looking for a massive breakout from that, but there is certainly room for price to trade down to this area here. So there is some support over here, over here, over here. This area, that's where the last previous low was as well. So in terms of where price is headed next, there is space for price to trade all the way down to that next level of support. So that's what I'm looking towards with my trading on Aussie Kiwi. A couple more cross pairs. I want to look at EuroCAD. So EuroCAD, this is the monthly time frame here. We can see that basically for the last 2 months, February and January, so for this whole year so far, those are doji candles. So price really hasn't moved very much January or February. Now, price has taken out the high of those candles. It's taken out the high of last year's trading, and it looks to be headed to the upside. Weekly time frame, we're now seeing higher lows and higher highs. Daily time frame, higher lows and higher highs. I am bullish on EuroCAD. And I am looking for a pullback on the daily time frame. This area here is of interest to me because that wasn't a level of resistance. So on a lower time frame, for example, that could be an area that I would be looking out for price to pull back to in order to give me a long opportunity. So EuroCAD is on my watch list for this week. Euro Swiss is also on my watch list. Euro Swiss, something that a lot of traders tend to avoid actually, but I quite like trading Euro Swiss. When it ranges, it ranges. When it trends, it really can trend quite nicely. So on the monthly time frame here, again, you can see that February certainly didn't do an awful lot. Price has now in March taken out the low of the previous 3 months of trading. It's a very bearish candle so far, and that indicates to me a potential move to the downside. We've taken out this previous low on the weekly time frame. Lower highs are in place. So it looks to me like this is a turnaround in direction from this bullish move up here. It's turned around, heading back to the downside potentially. So I'm bearish on Euro Swiss. On the daily time frame, I mean, as Julian said, the Swiss franc is one of the currency pairs that really did move last week. And we can see that here, these last couple of days of trading. So that is a pretty strong move. I need to wait for a pullback before I can get into that on a daily time frame. There might be something on a lower time frame to get into. I mean, I would say under normal circumstances, even in around this area, but I wouldn't get into an intraday timeframe trade right at the beginning of the week. So I would definitely want to see the market settle down Monday morning before I start looking at intraday trading. So Euro Swiss is on my watch list for short. And Pound Swiss is another one. In fact, there are a couple of, let's get this pound crosses up. There are a couple of pound crosses that look pretty interesting for this week. Looking at pound Aussie, just to see if this previous high here can be breached. That's a kind of significant level there that I would be looking for a move to the upside above that. And if that happens, then I would continue looking for opportunities there. And CAD as well, looking fairly bullish. If we look at the monthly time frame, we can see that price has taken out February's trading. It's just about taken out January's trading. The problem with this is that there is a lot of support over here, and we're heading into a very kind of rangy area of price action. But I am bullish on CAD nonetheless, and I would ideally like to see these highs taken out and then a pullback, and then I'd be looking for potential long opportunities. Pound Swiss, looking for shorts. Now, the reason I'm keen on looking at Pound Swiss right now is because if we look here, So on the monthly time frame, February ended as actually a fairly bullish candle. February was a low test candle, and now just at the bottom of that. Someone who was potentially bullish on pound Swiss may have their stop losses just under here. And therefore, if we take out those lows, there could be a surge to the downside. And that is high on my watch list at the moment because of how close we are to those previous lows. That could literally move, almost as soon as the market opens. So I want to be prepared for that. We can see here these lows on the daily time frame. If they get taken out, then I would simply go to a lower time frame to try and find an entry, or I'd be patient and wait for a move and then a pullback. Let me see if I can find how to draw on this thing. So maybe just a move down here and waiting patiently for a pullback. That might take several days. It might take the whole week, but then there may be opportunity short from there potentially. So depending on what time frame you're trading on would dictate when and where the opportunities might be on that one. That is pretty much all I wanted to really look at for today. I think those were the main markets that I picked out to have a look at. So I hope that has been of use to you all. It's great to be on the Sunday show. I don't come into the Sunday show very often at all because it's family time really usually, but it's great to be here talking to you all, and I will speak to you hopefully some point in the not too distant future. Have a fantastic week ahead, guys. Happy trading, and we'll speak soon.